Hi, Samuel Leeds here, and this video is all about mortgages. So if you've got mortgage questions, you're wondering whether you can get a mortgage, what type of mortgage to get, or you're confused over mortgages, then this video is for you, so stay tuned. So I have here a sheet of questions, and Andrew, by the way, is from Regent's Court Financial, and he's my mortgage advisor and also does a lot of work for our students. And I've got here a list of questions that you probably no doubt get asked all the time, Andrew.
Right, yeah.
So would it be okay if I read them to you and you can answer eloquently?
Carry on.
Excellent. So the first question that I get asked quite a lot, Andrew, is if people say, if I haven't got a current mortgage, but I have money and good credit, can I get a buy-to-let mortgage?
There are occasions when you can. Quite often you'll be told that there's sets of rules about this. There aren't any formal rules, but there's a consensus that runs through mortgage lending. Most of the time you do have to own a property, not necessarily to have a mortgage. But we've done one yesterday for one of your clients where she doesn't own any property at the moment. She's a tenant. But she did own one 2 years ago. And we've been able to establish from the land registry her ownership of that property 2 years ago, and the lender said, that's fine, we'll do a buy-to-let mortgage. She has got experience of being a property owner.
Yeah. If you've got no experience, say you're 28 years old, you've got £50,000 in the bank, and you've lived as a tenant for all your adult life, is there no way that you could get a buy-to-let mortgage?
Yes, we've just done 2 or 3 of those. Because there are 2 or 3 lenders who will consider it based on credit score and how much your income and outgoings are.
Yeah.
And basically I think what they're doing is they're working out that if the buy-to-let thing didn't work, can you still afford to pay that mortgage based on your income?
Sure.
But it's literally, when I say 2 or 3, it is literally 2 or 3, and you have to pass their credit score, which can be quite tough, and you have to have minimum earnings and that type of thing.
And is the interest going to be absolutely extortionate?
No, the 2 we've done are very competitive rates. So they're ordinary high street rates. So they're not being penalised because they're outside the normal lending criteria.
Excellent. Okay. What about, here's another question. What about if you've got a property, you've got a residential mortgage, but your income's really low, and you want to get a buy-to-let mortgage, you found a really good property, but you have not really got an income, or you've got a very low income. Can you get a mortgage in that position?
The answer is yes. There's an increasing number of lenders who say we have no minimum income requirements.
That's great.
So until 3 or 4 months ago, there were only 3 or 4. Now there's 4 or 5. Brilliant. So it seems to be a trend.
Because a lot of my students, they take themselves out of the game, don't they? Yes. Straight away they'll say, oh, I've got a low income, therefore I can't get a mortgage.
Yes.
But that's not necessarily the case.
Not necessarily the case, no.
Great, okay. What about age? What about if you're below 21? How old do you have to be to get a buy-to-let mortgage?
There are no rules, as I say, but most lenders say you've either got to be 25 or 21. Yeah. If you're under 21, we have done them for people under 21, but often the lender requires that there is somebody else on the mortgage who is over 21. Great. So as long as one of the 2 applicants qualifies, then they're okay with that.
That's another thing, because we've been having some of our students who, like Sarija, for instance, who can't get a mortgage. She's been told absolutely not. She's got no income. She's below the minimum age. Right. It's just not happening. But then you've spoke to her and you've said, but if you could find someone else, how does that work?
Some mortgage lenders require that both the applicants, or if it's more than 2, up to 4 applicants, that they all qualify for that lender's criteria. Yeah. But some of them say no, as long as there is one person on the mortgage who qualifies to meet their criteria, there can be other people on there as well.
So if I was 18 years old, I had no credit, bad credit or whatever, and I just could not get a mortgage. Yes. But my mom was willing to help me out a little bit. How would that work? Would she be classed as a guarantor or a mortgage host? What does that look like?
The mortgage host is not a term generally used by mortgage lenders. It would just be a joint mortgage with mum.
Yeah. And you were assisted... You used the word assisted something, I can't remember, assisted tenancy or something?
Right. Well, what you could do is you have to work out between yourself and mum who actually owned which bits of the property. Mm-hmm. So do you both own the whole property, as a husband and wife normally do? Or does mum own 50% of it and you own 50%? Or those percentages, tenants in common it's called.
That's the one.
Tenants in common. It doesn't have to be 50-50, it could be 90-10 or 99 and 100.
So let's say I spoke to my mum.
Yes.
And she said, Samuel, you're 18 years old, you can't get a mortgage. Yes. what we'll do is you can put me down on the name as well.
Yep.
And I'll have just 1% stake in the property.
Yes.
And then in 2 years' time, you can refinance.
Absolutely.
And then I have the mortgage in my name completely.
Absolutely.
How does that work? That sounds so too good to be true.
No,
almost.
it does work. The thing that we have to remember is, and that we have to remind mum is, that although the percentages of the ownership are perhaps 1% and 99%, the liability for the mortgage is 100% for both of you.
Yeah.
So although she's on the mortgage, the lender isn't interested in percentage of ownerships.
Yeah.
The lender's got two people to fall back on for the whole mortgage. So if you disappear to Australia and you've had enough and leave mum in the lurch,
yeah,
she's still responsible for the whole mortgage.
Yeah.
Or if mum goes off somewhere and leaves you, you're responsible
but
for the whole
what you could say
mortgage.
to your mum or whoever the person is, look, this is a really good property. Here it is.
Yeah.
If I disappear, then the house is yours. And if it's a good house, presumably if mum's got some sense or if mum cares and wants to help, then that should be okay. But it's really strange how the lender would say, no, you can't get the mortgage, but then mum can come on for 2 years, then go off, and then that's...
The lender has no control over mum coming off the mortgage. It's just that lender or another lender after 2 years will just assess it, and it'll be what's called a transfer of equity.
That's great.
And if they think, well, it now stands on his own part, then they'll do it.
Love it. Next, HMO mortgage.
Yes.
What is a HMO mortgage, and when do you need one?
Right. The term HMO is slightly confusing sometimes because an HMO proper is a licensed premises, so it's a property that's been purchased and somebody has converted it into a property which is no longer a private dwelling for a family to live in. It's a property to be rented out in individual rooms with communal facilities, perhaps with fire doors, smoke alarms, that type of thing. But it is also a property that's been registered by the local authority in the area which you're buying the property as an HMO, as a house of multiple occupation. So it's covered by that local authority licence. However, the word HMO is often used for something which is more relaxed, which is a house of multiple occupation, where it's almost like an HMO, but it's just a house.
Yeah, like what we buy, a multi-let.
Yes, a multi-let. So the term HMO, strictly speaking, stands for a property that's licensed by the local authority, which has gone through the licensing process.
But a lot of ours aren't like that.
No, and my own opinion is those are attractive because if ever you come to sell it, you don't have the situation where you have to sell it as an HMO.
Yeah.
It's a family dwelling.
So the properties that I often bring to you, what would you call them? Not a HMO, because they're not registered. They're not big, licensed en-suites. They're just a house that's being used as a multi-let.
In the main, most of them
So you
are.
would describe that just as a multi-let or a small HMO?
That's right.
So what type of mortgage does that smaller multi-let type of property? Maybe it's just a normal house, you're renting it out to 4 professionals.
Yes.
What type of mortgage does that need?
Some lenders treat multi-lets and HMOs as the same. Mm-hmm. So they would regard it as an HMO from their own point of view. So their underwriting and the mortgage deals that they offer would be HMO ones. But some of them, there's a little quirk in the system in that they'll say, well, no, there's 2 or 3 lenders who say, if it's a multi-let, we'll treat it as a standard buy-to-let. So you'll get standard terms. But it is literally only 1 or 2.
Yeah.
But the common way of dealing with it is to say that even if it's a multi-let, if all the tenants sign the same assured short-hold tenancy agreement, then the lender won't regard it as an HMO or multi-let. They say it's a standard tenancy.
Yeah.
As if it's just a family, all signing the same tenancy agreement. And that can get you a wider scope of lenders to choose from and perhaps potentially better terms.
That's excellent. So you just need to speak to the letting agent and make sure that that's okay.
Absolutely.
There's a lot of confusion, I think, around HMO mortgages. People think just because you're renting it out to more than one person, suddenly you need a big, special kind of mortgage. And that's not really the case necessarily.
No, you definitely need one if it's a licensed HMO.
Yeah.
But if it isn't, then there's often some flexibility in the approach with the lenders.
Excellent. All right, next. What is the minimum a mortgage company will lend for a buy-to-let mortgage? So if it's just an individual buying a cheap house, which is not going to be used as a HMO, what's the minimum they'll lend?
It's to do with the minimum purchase price, and the minimum purchase price generally, as far as we know, is 40,000. There isn't anybody doing less than 40,000.
So if it's less than £40,000, you're going to struggle to get a mortgage on it.
Definitely.
If it's £40,000 or above, as long as the house is built well and it ticks the usual boxes, if it's a £40,000 house, you should be able to get a mortgage on that.
Yes, and that particular, there's one lender who will do it at 40,000, and they have no minimum income requirement.
Brilliant.
So
if someone has got no income,
yes,
£10,000, and they're an individual, they can go ahead and buy a house.
they have to have some income.
They have to have some?
They have to have some, but
how much?
There is no requirement. There's no minimum income requirement. You've got to have something. So if we were to put down on the application form, they don't have any income at all.
Sure.
Then the lender's likely to refuse the mortgage.
But if it was, say, just £5,000-10,000,
absolutely,
it's something.
Yes, that's right.
Brilliant. Well, that's good news.
Yeah.
Next, what is the minimum a mortgage company will lend for a buy-to-let as a company? So if you're buying a property as a limited company, what's the minimum then they'll lend for the purchase price of the property?
A lot of lenders find that limited company buy-to-let mortgages are more labour intensive than normal and more expensive to run. So a lot of them say the minimum purchase price of the property has to be 100,000.
Yep.
There are a few, 3 or 4, who will do it at less than that. The minimum we know of is that there is one company who will do a limited company at a purchase price of 60,000 only.
Wow, I thought it was 75,000.
It was until a little while ago, but there is one company now that we know of who will consider a limited company purchase, possibly 2, just depends on whether you fit the criteria.
Great, excellent. What about if it's a multi-let being bought as a company?
Probably 75,000 is
75
in most cases.
We usually advise people to go for 100,000.
100,000 is better because almost all limited company mortgage lenders, whether it's HMO or standard one, will do £100,000.
But if it's less than £100,000, there might be 1 or 2 that would do it.
That's it. There are 1 or 2. We do regularly use 1 or 2 for less than that.
Because we're passing you properties. So that's true. What about if it's a multi-let and it's being bought through as an individual? What's the minimum purchase price?
Again, it could be 40,000. That one at 40,000. If it's a multi-let with all people signing the same tenancy agreement.
Sure.
So it does depend. If it's not, then probably 75,000 is a general rule of thumb.
Really helpful.
Yeah.
Okay, next question. I'm really enjoying this, Andrew. Thanks for coming on. Next question is, can you buy a company that owns a property and take on the mortgage?
The answer is you can. The mortgage lender has to approve you as a borrower.
Yeah.
So
I've done this successfully, and other times it's not worked.
No, it's a question of the mortgage lender approving the person who's buying the company or the people.
Yeah.
And then, of course, in an ideal world, if you're buying it from somebody, that person you're buying it from will want to come off the mortgage because they'll want to remove their liability for that because they no longer got the company. So yes, it is possible to do that. Yeah.
Okay. A bit more topical and kind of the questions that you probably normally get asked is, what are interest rates currently doing at the moment?
They're sort of fairly level. Even the dear old Governor of the Bank of England isn't quite sure where they're going himself, is he? Generally speaking, of course, we have to ask the chap upstairs or woman upstairs, from whichever your point of view is on that. But my own opinion is that they might rise. They always rise, don't they, ultimately?
Yeah.
They might rise, but I'm not confident that there'll be some large rises in the immediate future.
Why?
Because things in the economy are still not particularly active. We are struggling with Brexit, and there's still a lot of supposition that Brexit is going to cause problems.
Yeah.
So, and the fact that the Governor of the Bank of England keeps talking about rising interest rates, and then when it comes to it, he doesn't put them up, suggests to me that he keeps reviewing the situation. And personally, I think it's a good idea to fix the rate if you're going into an enterprise because you've got the security of that. But I'm not convinced. There's no evidence to me that interest rates imminently are going to rise.
Right now they're very, very low. I mean, they were at an all-time low, I think.
Yes.
I mean, you can get a buy-to-let mortgage now around about 2%, 2.5%.
Yes.
Which is incredible. I mean, the fact that you can fix interest rates, obviously not that low, but for 5-10 years even at times, kind of comforts me. Because why would a lender let you fix your interest rates for 10 years, knowing that interest rates are going to absolutely rocket?
Yes.
So, I mean, they are going to rise, I think, but it's not something that I'm...
Can I mention something, by the way, you said about 5-year fixed?
Yeah.
There's an issue that is not generally known in mortgage criteria. If the relationship between the rental income and the mortgage payment is too tight for normal lending, sometimes a lender will offer a 5-year deal and relax the terms slightly. So we have found occasions recently where the relationship between the rent and the interest payment is too close for normal lending criteria. But the lender says, well, if you have a 5-year fixed rate, then we'll relax our rules slightly because we have the confidence that you're going to be okay for those 5 years.
That's interesting. Yeah.
And that's little known, that particular point.
Lovely. What are some case studies of some recent people that you've helped?
Right, okay. Let me think. You've picked on one. We had a woman who, I did it this morning, and she doesn't own any property at the moment. She's a tenant. Yeah. She has not much income. But she did own a property 2 years ago. She was on the deeds of a property, and we've done her a buy-to-let mortgage.
Yeah, that's great.
So there's issues like that.
Yeah.
There are ways also of getting people in on HMOs who don't have a lot of experience. Yeah. And it's little known. You won't find it on the software that we all use. But again, I think somebody who's coming to your meeting tonight has just done one. We've done it through them successfully, where she's bought one buy-to-let mortgage or property, just as an ordinary buy-to-let. And as soon as she's had 1 month's income that she can demonstrate on her bank statement, and she can produce the short hold tenancy, a lender has said, well, she can now have an HMO because she has 1 month's experience.
Oh, that's brilliant.
It's not a general issue thing. You can't always do them, but we've been able to do it 2 or 3 times this year.
Excellent.
So there are little ways we can work around things if we use our imagination.
I love it. What I love about you, Andrew, is you're very creative, and rather than finding problems, you find solutions.
We like to think outside the box.
Yeah. Yeah. So what would you suggest if someone wanted to talk to you? What's the best way for them to get in touch? How do you operate?
The easiest thing is to ring us.
Yeah.
Probably the office number at the moment is the best one, the reliable one, because people ring on the mobile sometimes, and I'm busy and I can't take the call, and then I have to come back to them later. But if they ring the office number, somebody can book in for us to have a chat.
Brilliant. I'll put that below on the link, and thank you ever so much for your time.
No problem.
Cheers, Andrew.
All right then, thanks.
Cheers. Thank you so much for watching. If you benefited from that video, please do share it with your family and friends. For more videos like it, you can watch right here. And if you'd like to spend 2 days with me at the Property Investors Crash Course, watch this video, see what happens. But whatever you do, don't forget to subscribe right here, and I'll see you next time.